This week in economics on the 21st of December 2014 as we move through the year 2014. And Dr. Janet Yellen, the head of the Federal Reserve, had an FOIC meeting, or they had their FOIC meeting, and she had a news conference. We'll go to that as we finish up a number of items here that move into the Santa holiday season, and where the and where the market stands in Q4 as we go into Q1 of 2015. Very interesting situation. We'll approach it from a number of angles. We'll start out with the Canadian economy, and we'll go to a number of other economies and the Russian economy, the Russian Federation, and what is going on in Europe, and of course also to where China plays into this to sort of get an idea of where we are going. And the price of petroleum products, of course oil, gas, going down, stabilizing. Where will it go? Heard an interesting discussion today on Bloomberg News, and we'll get into an article, an opinion article, I should say, from Reuters, and an economist for the Economist magazine, and his take on where these prices are going. But let's first go to the Canadian economy, and of course the reason for this is geopolitical, in that President Obama in his news conference, his final news conference of the year, talked about the Keystone XL pipeline as being a Canadian pipeline, which in effect it is a Canadian pipeline. It would affect a few jobs across the American continent, about 2,000. And his friend in Steel City, Nebraska, told me that once things are back to normal, in other words, the pipeline is completed, the construction workers are gone, and we have people that maintain those pipelines, very few people there. So let's get into where Canada is. The inflation rate in Canada has slowed, no doubt about that. The consumer price index is at 2%. It rose 2% from a year ago, following the October pace of 2.4%. This is from Statistics Canada in Ottawa, Canada. That's on the 19th. The core rate, which excludes 8 volatile products, including fruit, vegetables, gasoline, slowed to 2.1%, following the October pace of 2.3%, which is the fastest in almost 3 years. Economists forecast the total rate would rise 2.2%, and the core by 2.4%. That's according to the median response in a separate Bloomberg News survey. Bank of Canada has said inflation will slow to 1.4% pace in Q2 of next year, adding a period of faster than expected gains linked to temporary factors such as a weak currency and price increase for products such as meat. Policymakers have kept their benchmark overnight lending rate at 1% for more than 4 years. Slower inflation is about in line with what the bank was thinking. That's Mark Chandler, head of fixed rate research at RBC Capital Markets in Toronto. The Canadian currency extended decline after reporting a weakness of 0.3% at 1.607 versus the dollar. The Canadian dollar purchased $86 and this is 86.16 U.S. cent. As the benchmark 10-year bond dropped 3 basis points to 1.4%. So basically, one Canadian dollar is worth 86 cents. It's been that way for actually quite a while. I can think back to the 80s, we were basically, I lived in Vancouver, Canada. I can remember that. Nonetheless, electricity prices gained slow at 3.6% from 5.6%. That's also from Statistics Canada. Gasoline prices fell 5.9%. On a monthly basis, total inflation fell 0.4% in November. Core rate fell 0.2%. And the Bloomberg economists predicted that price would fall 0.2% over the month, and core rate at 0.1%. Seasonally adjusted inflation declined 0.2% in November, and the adjusted index core price was unchanged. A little bit of Canada there. We try to sort of mix this up a bit so we can get various actors in. We'll go now to Japan. Bank of Japan maintaining unprecedented stimulus. There, the central bank will boost monetary base at an annual pace of 80 trillion yen. That's $670 billion. Said that in a statement. So thus they are still trying to stimulate themselves out of deflation. The yen has declined 8.5% against the dollar since the day before October's easing, and was down 0.4% at 119.37. That's in Tokyo after touching a 7-year low of 121.85 in December. Growth strategy, as speaking before the Parliament, the Prime Minister there, Shinzo Abe, is set to appoint a new cabinet. They had a snap election there. The drop in oil prices has crimped inflation, complicating the task of generating stable 2% gas price gains after he led. Well, anyway, that gas pricing is very important to Japan because they're gas dependent. Consumer prices will likely be around the current level for the time. That's their prices excluding, again, food, fresh vegetables. The effects of the sales tax, as a key measure, rose 0.9% in October from a year ago, and after slowing 1% in September. Plummeting oil prices. The break-even rate, a gauge of bond investors' expectations of future inflation over the next 10 years, has declined 26% so far this year, and then signal a 0.83% annual cost of living. Excluding sales tax, corporate goods prices declined 0.2% in November, the first drop since March of 2013. Japan imports almost all of its oil, is dependent on fossil fuels to drive its economy, with the nation's nuclear power industry shuttered after the disaster in 2011. We long remember that. Dubai crude oil, a benchmark for Mideast suppliers from Asia, was at $58.80. We don't hear about that very much here. We'll start looking at it more. A barrel losing 31% since October the 30th. Barclays' lowered inflation outlook reflects a forecast that Dubai oil will be at $60 a barrel in January before gradually rising to $70 by the end of the year. That's according to an email from them. Dubai oil at $60 a barrel would give the same boost to growth as an additional 10 trillion yen worth of fiscal stimulus. OPEC has lost control of the oil market, casting a shadow over the world economy. That is from Mr. Okada, Chief Financial Officer at Mishi and Company, which has about $70 billion in assets spanning 60 countries. It could take oil company bankruptcies, production stoppage at higher costs, members of OPEC, or widespread shutdowns of shale output in the U.S. to stabilize prices. That will not happen. I'm really concerned with the global economy. Okita said in the interview at the Tokyo headquarters this week. So there are some, as one would say, cautious prices, I should say cautious predictions on the economy as it relates to the world. An important thing to note here, in the U.S., as far as its global exposure rate, or global trading rate, is about 16%. Less than most nations, pretty much self-contained. And of that, 70% of the U.S. economy is consumers. A little different scenario there. Whereas a lot of countries have about a 40% exposure rate to the global economy. However, the banking system, and that is, if you watch political developments the last 10 years, has become a major factor. And that's what happened in the Depression, as when the banks started to wobble and go down like dominoes. G.W. Bush, the former president, was forced to act with TARP. Now that in itself is interconnected. U.S. banks are interconnected with European banks, are interconnected with the rest of the worldwide banking community. And as Willie Sutton once said, that's where the money is. Not a pun indeed there. Let's go to Nigeria's growth in 2015. Another oil giant slows to 5% in 2015. That's from the INF. Drop in, of course, oil prices. The drop in crude prices will exert pressure on Nigeria's fiscal revenue and spending. A depreciation of local currency expected to boost inflation. The Washington-based lender, they are based at the INF. Nigeria's policymakers devalued the Naira last month and are proposing spending cuts for next year. The country's fiscal and external buffers are low and need to be rebuilt, with West African nations oil. The excess crude account depleted to $3 billion from $21 billion in 2008. The price of oil of the INF, as it says, dropped 45%. Nigeria remains vulnerable to oil price volatility and global financial developments. That's from Glenn Leon. He's the INF's Nigerian representative, said in a statement. There are domestic risks, including uncertainty ahead of February's election and security. Africa's largest economy is drifting towards political violence that may result in disrupted elections, and authorities need to take action to stop it. That's from the Brussels-based International Crisis Group. Goodluck Jonathan, he's their president. It's an interesting name to have. Ruling People's Democratic Party will face a united coalition led by former military leader there, Barari, who was ousted in 1999. Capital outflows have continued, and with lower petrol receipts have led to sustained pressure on the Naira. As from Mr. Leon. So we get a collection of nations that are having some problems. Let's get to the Reuters piece now. That here I want to get it in and sort of round up what is going on here. This is by Anatoly Koletsky. He is an economist, journalist, has written since 1976, been around a long time for the Financial Times, the Times of London, before joining Reuters. His recent book is Capitalism 4.0. Nonetheless, let's get to this article very quickly. 50% slump in oil prices raised